Today, Bitcoin crosses $88,000 while US stocks slide. Bybit says about 28% of its lost funds from the record-breaking February hack have gone dark. And CoinFund's Alex Felix explains whether interest in AI is eating into crypto VC investments. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Digital currencies in the green this morning while Wall Street slides as investors await trade deals between the U.S. and other countries, and as President Trump ramps up his attacks against Fed Chair Jerome Powell. As of noon Eastern, Bitcoin climbed nearly 4.5% to $88,000. Ether rose more than 3% to $16.23, and XRP climbed 3.4%. Okay, let's talk about the top stories. Bybit says 28% of the funds hackers stole in a record-breaking heist are untraceable. CEO Ben Zhao posted an executive summary on X saying more than two-thirds of those stolen funds remain traceable, and nearly 4% have been frozen. Those funds were predominantly Ether, and Zhao says a vast majority of that stolen ETH has been converted to Bitcoin, mostly through cross-chain platform Thorchain. The FBI confirmed North Korea-backed Lazarus Group is responsible for the hack. Bybit said it fully replenished its reserves through deposits and emergency loans just days after that hack took place in February. Finally, several crypto firms are reportedly seeking bank charters nearly a month after the FDIC loosened rules for crypto-related banking services. The Wall Street Journal reports USDC issuer Circle and digital asset custodian BitGo plan to apply for bank charters or licenses. It also says Coinbase and Paxos, another stablecoin firm, are considering similar moves. The Journal reports some of the companies are after charters to operate similar to traditional lenders, while others are seeking licenses that would allow the issuing of stablecoins. This comes after the FDIC issued new guidance for banks engaging in crypto. Those new rules said institutions can engage in activities tied to digital assets, provided they manage associated risks. At the same time, stablecoins remain a top crypto priority in Congress, with two bills being discussed. World Liberty Financial, a DeFi project tied to the Trump family, also announced last month that it would be entering the stablecoin space. Circle, BitGo, and Paxos declined CNBC's request for comment. A Coinbase spokesperson confirmed this is something the company is actively considering but has not made any formal decisions yet. All right, turning to crypto investments for our main story. Research shows Bitcoin-related startup deals surged last year alongside crypto prices. But has that momentum stalled now that prices have dropped since then? Crypto World's Talia Kaplan spoke with Alex Felix, Chief Investment Officer of the crypto-focused venture capital firm CoinFund, for some insight.
Coinbase is warning of bearish trends in crypto. Its April monthly outlook for institutional investors noted that even with an increase in VC funding in the first quarter, funding levels are still down between 50 and 60% from the peak reached in the 2021 to 2022 cycle. That limits the onboarding of new capital into the ecosystem. You're in the crypto VC space, so I'm wondering if this is something you're experiencing firsthand. What are you seeing?
Yeah, what we're seeing is just a continuation of sort of the post 21 tech market bubble, as well as some of the issues that came out of crypto on the backside of that, FTX, et cetera. So it's really just an extension of a longer bear market that's been almost 4 years now, at least for the crypto space outside of Bitcoin. Bitcoin has found extreme product market fit with investors and continues to grow market share. The crypto index has kind of reached $2.8 trillion, up from about $2.3 trillion this time last year. But that $500 billion largely comes from Bitcoin gains. And I think, deal activity in 24 was up about 64% in terms of number of deals, while capital was up 30-something% in terms of the amount of money. So on record, 2024 is still the third largest year of funding for the crypto space, and sort of maps to where we think the maturity is of an industry that outside of Bitcoin, Coinbase, and Ethereum is largely less than 10 years old.
That new Coinbase report also said all of the structural pressures stem from the uncertainty of the broader macro environment, where traditional risk assets have faced sustained headwinds from fiscal tightening and tariff policies. That contributes to the, quote, paralysis in investment decision making. Do you agree with that assessment? What do you think are the driving factors behind the slowing VC investments noted by Coinbase?
Yes, there's a number of factors that go into VC investment, and from my seat, you really have to look at the space over a very long time frame. Um, Venture investors, typically who kind of come in and out of the market and try to time things, tend to miss some of the great companies and some of the great vintages that drive a lot of the returns. The average venture capital return is not great. And so if you want to beat the S&P, if you want to be the best, you really have to be looking for the best businesses whenever they are formed. Now, on specifically the amount of capital flowing into VC has been held up or hurt by a couple of different things. One is less DPI from traditional Web2 venture players has flowed back to investors. So it's sort of put some pause and stress on their new allocations to privates. They like to recycle that capital as it's earned. They also like to see a mix of public and private. So you get what's called the denominator effect. So right now, as public markets fall, your private's basket looks bigger and sort of forces less reinvestment. The third thing that's going on just presently, at least over the past month or so, is endowments, foundations, some pensions don't have a strong outlook on their grant funding. And that puts some pressure on their understanding of what their outflows to support the various initiatives might be for the next years. And that stresses, sort of preservation of capital, thinking about if there are good buying opportunities in the public markets, why do I need to take some of the illiquidity risk? And all those things combined, lead to some uncertainty in the VC funding landscape. But we've come down a lot. We're in a healthy place. And I think we're just part of that reset, which is exactly why we're talking about it today.
The Coinbase report suggests crypto prices could find their floor this quarter. Do you see that happening? What do you think it will take to experience a rebound in both crypto prices and VC investments?
Yeah, this macro-driven downturn for crypto is flows, it's people's uncertainty, it's expectations, it's the credit markets, equities markets. Crypto remains a kind of fringe asset or a high risk asset, though Bitcoin is carving out a niche as a just alternative to everything else out there, right? When you either have to own one particular currency or you can own an alternative that puts some checks and balances in place for what other governments are doing. You can find some uncorrelation in the returns, but during difficult market period over a longer time, but during difficult market periods like today, correlation tends to go up, and we tend to see crypto trade off. I would note that things have actually been pretty good in the crypto space. We are seeing a bit more activity on the networks. We're seeing prices not go down and have high beta to Nasdaq's retrace here, and I think the outlook is a bit uncertain though. I can't say this quarter is when we bottom. Bottoming is usually a process, but we've been through 4 or 5 major corrections in the crypto markets over the past 10 years, and it does eventually stabilize and go back up.
According to PitchBook, AI is getting the majority of global venture dollars, with 58% invested in the first quarter going to AI and machine learning startups. Compare that to Q1 of last year, which saw just 28% of VC dollars channeled to AI startups. Are you seeing an uptick in interest in AI, and is that eating into crypto VC investments?
It's not eating into crypto VC investments, but it is another potential large technology wave. And what we look for in the venture space is what are some trends in technology that could define that decade or a number of decades. So, our bet is that crypto is one of those. AI, certainly poised to be another one. And we haven't really seen one since the major social, mobile social cloud sort of transitions back, 10, 20 years ago. And we actually believe that crypto is a great counterweight to the centralizing forces of AI as it's being developed by a lot of the large, already mega tech companies. And there's a lot of room for democratization, decentralization, some checks and balances on how those folks are using data and verification. A lot of people don't know what these outputs mean. They don't know where they're coming from. And as we start to plug them into business processes downstream, I think blockchain rails are going to play a major role in that. So what we tend to see is actually in the Web3 space, looking at sentiment and mindshare narrative, about 30 to 40% of that within crypto is AI, in that sort of intersection of AI and crypto. So it's already the biggest subsector within Web3 that people are paying attention to and investing in. And we're one of the leaders in investing at that intersection of AI and Web3. When you look beyond that, it's other narratives in Web3 that have taken more front and center this year, which have been payments and things like meme coins and others, starting to trail off from their, peak hype, 6 to 12 months ago.
Felix also details some of the other crypto investments he's focused on right now. You'll be able to check out his full interview over at cnbc.com/cryptoworld. Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.